love to start off by giving us a brief intro into who you are. Then we'll start diving in a little bit into about crypto charting, analysis 101. Give us the juicy details on how to find our entries, exit, all that good stuff. But we'll start off by introducing you, 0xFibonacci, if you'd like to say hello to everyone.
Yeah, of course. So some of you that have been here for a while probably familiar with me. I know I went through a little rebrand this year, but I've been a MVHQ OG since the mint in July of 2021. And I've been in crypto since like October 2017. I used to be an actuary, and I was at work and saw like Bitcoin futures were coming out, and I hit up a buddy, asked him how to buy Bitcoin. Back when it was like 6K or something. Kind of dabbled trading off and on, made a bunch of money, lost a bunch of money like most people do. And I came across VeeFriends kind of in the early NFT phase last year. Minted that, but faded Bored Apes. So definitely made some wins, but lost some, or missed out on a bunch, of course, as well. So I, hustled with NFTs enough to build up enough consistency that I actually quit my corporate job at the end of February last year and went full time. And then kind of after the other deeds mint, I saw that NFT volume dropped off quite a bit, and I obviously was self-employed and trying to keep making money. And I really just decided to really dive headfirst into the trading aspect and double down on education, find the right mentors and groups to learn from. And really kind of since then spent about 90% of my time on crypto trading itself. I still do a little bit of NFT stuff, but much more just kind of day trading. And found success enough to kind of pay the bills consistently, and built out some resources. I know EQ, you shared kind of my field report with the YouTube channel and kind of PowerPoint that I put together. But really just wanted to kind of have this call to answer any questions you guys have, and also maybe skim through some of the materials and kind of share with you guys kind of what my, I guess, week and strategy looks like from a trading perspective. So EQ, was there any other prompts, or do you want me to just go ahead and see if anyone has any initial questions, or we can kind of look over some of the materials?
Yeah, I don't see any questions in guest questions right now, but feel free to just dive right into your. I remember you mentioning you wanted people to look through the field report you did a while back. Maybe giving a brief intro into that, and then feel free to screen share, show us your daily setup and your thoughts about your strategy.
Sure. So I'll go ahead and share my screen. All right. So it's not letting me share my screen without crashing. So probably either EQ, or if you're going to be on the whole time, we can either have you share and I can kind of chat through the PowerPoint, or we could just have people pull it up themselves. What do you think is best?
I can screen share and show the PowerPoint. Could you just DM that to me, and then I'll get that set up?
So I'm mostly going to kind of skim through this stuff. I definitely recommend actually spending the time to kind of go through my YouTube videos that I kind of explore all this in detail. I'm just going to kind of skim through a lot of this stuff to give you guys kind of a basic context, and obviously feel free to ask questions while we're live. And then as you go through the materials, like save some questions. I'm planning to kind of do these AMAs at least monthly, I think is what me and Poopaloop talked about. So if you guys go through this stuff later, we can definitely have more calls to kind of discuss questions. But I know we've got a lot of new users to the HQ, so that this is probably the first time a lot of you are even realizing that this resource exists. I just wanted to kind of skim through it. So I did like 4 quick videos. First one's kind of just the options that are available to trade futures, as well as some paper trading options. Biggest thing there is, especially starting out, it's super important that you start paper trading, because trading isn't super easy and you're going to lose money while you learn. So it's better to lose fake money than your actual money. So that's like really the first video. Probably don't need to talk too much about that. The second video, I do want to kind of go over a little bit, is kind of risk management and this position size tool I came out with. and so we'll go over that a little bit more detail. The third video we can kind of skim through is basically like a comprehensive technical analysis overview. Probably like 60-70% of all the stuff I've learned, at least the most important stuff, condensed in like a 40-minute video. So a lot of good stuff there, and then just some key principles that I've learned. So maybe go to like the risk management thing. We can just kind of start there. The video 2, the risk management stuff. Keep going down a bit. I think it's 1 or 2 slides lower. Yeah. So go to the next slide. So yeah, basically with this video, I kind of talk about looking for good risk to reward setup. So this infographic over to the right, you'll see a lot of like familiar charting patterns. And the main thing I talk about in this second video is if you notice all of the kind of red and green boxes in the infographic on the right, like the red rectangle is smaller than the green rectangle. And basically what that translates to is you're looking for setups where if you win, you make more money than if you lose. And it's really just like a math concept that to increase your odds of being profitable long term, if you have winners that exceed your losers, you can have a pretty low success rate and still make money. So personally, for instance, I only look for trades that are at least like a 2x risk to reward. So if I am right, I'll make 2 times as much as if I'm wrong. And the math works out that I can literally only be right like a third of the time, and I'll at least break even, at least in principle. And so that's kind of the strategy I use, is to only look for kind of good setups that have good risk to reward. And then this position size calculator, I think I might actually, are you sharing your screen, EQ, or just the PowerPoint? I might give you another link.
I'm just sharing the PowerPoint right now.
Okay. Yeah, can you, or I guess you can't click on that link probably with the PDF, can you? Sweet, that worked. Okay. So, sorry, I just got back from a run. I apologize if I'm coughing a little bit. So this position size tool, just a quick rundown. I made it to kind of make my trading a little more systematic. As I was, trying to fine tune things, I was realizing that my biggest losses were when I was, maybe laying in bed on my phone and just making like an emotional decision without like following a system. And so I was really trying to fine tune like a system that forced me to kind of follow all my check marks, I guess, before entering a trade. And coming out with this tool, I basically have it where you can input in like those like A1 through A8 or whatever, various like setups that you have varying levels of confidence in. So I have a few examples in like column C, like if you have a trusted trade caller, or if there's certain, third touches of major trend lines, and then like support and resistance trades in line with the trend or not. Like basically, as you get less and less confident with the trade, I basically have the risk kind of scaling down, so that if you're taking a trade that maybe you only have like 50% confidence in, you don't risk like as much as a trusted trade caller or something like that. And so once you populate, and you can just save out a version of this to edit anything you want. But once you populate those fields, you can toggle the drop down in A12, I think, to basically like, and I think you can probably just scroll over it real quick, EQ. A12, it should have just like a drop down on the left. Sorry. The yellow highlighted cell, A12, yeah. It should just have like a drop down that you can toggle.
It's not letting me interact with it. Is it because it's view only?
Yeah, you have to save down a version, that's right. But once you save it down, it's like just a drop down that you can adjust, and it'll it's okay, you don't have to. We can just kind of talk through it. Or you can do that too.
Gotta give them the real walkthrough,
Yeah. All right, yeah. So you can just toggle that to any of the setups that you've populated above, and it'll automatically adjust them based on kind of whichever ones you're looking at. And the whole point of this is like actually thinking through like, why am I actually taking this trade, instead of just like, I think the price is going to go up, like without any like kind of reason, this forces you to think like, why is this actually a good idea based on the setups you're looking at? And then the other yellow highlighted boxes are pretty straightforward. The account value you're looking at, the max percent you're willing to lose per trade, or risk per trade. And I have a note there. Typically, like starting out, you can just literally do like 0.5%, like just keep it super small. And as you gain confidence, get more consistent, you can scale up. But when you start out, like unless you're paper trading, you could do like 3%. But if you're using your own money, I would start out super small because you'll still have a pretty low success rate early on. And obviously, the combination of those two things gives you kind of the max dollar risk per trade. And then I have 3 fields for the entry, the stop loss, and the primary target for the trade. So this is kind of what creates those green and red boxes that we were looking at on the other side with the setups. And it calculates kind of the risk to reward based on those metrics. And I only take it if it's over a 2x. And really just the one thing to note, it'll calculate like how many coins you can kind of expose yourself to. And the cool thing with this is a lot of people like think when they see someone doing like a 50x futures trade, like, holy crap, isn't that like super risky? It's really a matter of how much size you're exposed to versus the leverage. So say that I have like a $1,000 account. If I wanted to do like a 1 ETH trade, I'd be like, using a little under 2x leverage for that. And I could still have that 1 ETH exposure with $500. It would just be higher leverage. So at the end of the day, the size of like how many coins you're exposed to, how the distance between your entry and your stop loss, and that basically like results in how big your loss is if you're wrong. So I tell people the leverage doesn't really matter as much as the actual size of like how many coins you're exposed to. And this position size calculator basically tells you like, if I want to take this trade, how many, I think this is an XRP example. So like 50,000 XRP would be like the most that I could expose myself to based on kind of these parameters. So it's just a way for you to kind of, like I said, make your trading a little more systematic, make sure you're using proper risk management. And then I have that trade tracker tab as well. If you want to flip over to that EQ, it's on the bottom. As you're learning, you can populate your trades in here. So you can put kind of the coin, the trade idea. The scale is basically just like the kind of confidence from the other slide. The size is how many coins. The 3 kind of metrics: entry, stop loss, take profit. And then the outcome is just like when you close the trade, was it profitable or not? The comments also super helpful, just kind of over time tracking like what went well, what went wrong. And you can kind of learn a lot from these comments, like, with the trades over time. And then column J, I just have like a field that calculates if it's profitable or not. So you can just track your win rate over time. So really recommend this tool. It's been like a game changer for my personal trading. I think the amount of times that I've over leveraged has probably dropped like 70 to 80%. I still like do it occasionally, but for the most part, like actually having this, like I can't take a trade unless I do this position size calculator first. It's helped me a lot with the risk management. So that's basically kind of the covering the risk management pieces. Any have questions before we kind of switch over to the setups and stuff? I can look in the chat too, because I know you're sharing your screen.
I just dropped a spreadsheet for anyone that's interested.
Could you walk through a quick example of the spreadsheet? So I would if I could share my screen, but let me see if I can. So actually, yeah, let me drop a few screenshots. I took a trade this morning in crypto. It ended up being break even, but I can share that real quick. Just give me a second to get a couple screenshots. One moment. All right. And I basically live in the MVHQ crypto chat. If you ever have any questions, I'll probably be lurking in there at one point or another. Okay, let's see. Copy this. Okay. And then I want this zoomed out version as well. Sorry, one sec. That's not how it works. All right. So I'm going to drop it in the office hours chat channel so I can find it. All right. So I just posted a setup that I was looking at this morning. These channels are something I'll go over in a little bit. I really like them. It's basically kind of a third hit of a trend line, but there's also like a parallel component of it. It just like makes the structure a little stronger than just a single trend line. So I really like taking trades on these third touches of these trend lines. So since this, and just if you guys don't know what I'm talking about, I just posted a screenshot in office hours chat of a Bitcoin setup I was looking at this morning. So I was seeing the price was coming into the third touch of this ascending channel for Bitcoin. So I took a long on the, so EQ just shared a screen. So I took a long on the third kind of touch of this channel. Oftentimes it'll pierce a little bit, and I got a pretty good entry. Ultimately, I was looking for, usually the target on these trades is either the kind of midpoint of the channel, or in this case, we had a range high around like 23.3. So I was actually like looking for these higher targets, and it ended up reverting down, and I closed out break even on this trade. But I'll kind of show you, I'll share another screenshot of how I put this in to my my position size calculator. So I'll get another screenshot real quick. So I'm pasting another screenshot in the office hours chat. Yeah, and you could just shared it. So basically what I did, this is I selected, this is the third touch of a trend liner channel. I'm trading with a small account right now for a little copy trading trial. So it's a small account value, and I put the 3% risk. And then I put my entry level, my stop loss, and my primary target. And this trade was like a 4.75x risk to reward. And then it spit out kind of the max size of Bitcoin that I could use for this trade. So this is basically what I used to enter this trade. Is there any clarification you need, BTC Alchemist, or does that help? I think it's over my head. Yeah, we'll talk more about the setups a little bit. That's what I'm guessing is probably the most confusing piece. But EQ, can you go back to the chart setup real quick? The screenshot. Yeah, this. Can you zoom in at all? Yeah. So basically, that kind of line going across the 22,763, that was my entry. The bottom of the red rectangle was my stop loss, and the top of the green rectangle was my take profit, if that helps clarify. So that's kind of the visualization of those three levels. But yeah, going through the videos will definitely help clarify a bit as well. I talk about a little more detail about kind of how to look for those setups and whatnot. Yep, everything's in detail on all the YouTube videos. A lot more explanation. Anybody else have any questions before we go into the looking for setups section? No? Okay, so EQ, I think we can go back to the PowerPoint and go to the video 3 section. Looking for setups.
Hey, JJ.
Yep.
I have a quick question.
Sure.
Would you say on average there's a period of days or a certain amount of time, not a specific time, but maybe from where you find a setup to how long you're generally waiting for that setup to be something that you're actively trading?
Yeah, it depends. So typically I only trade during weekdays and most often like kind of market open 9:30 Eastern until about noon Eastern is kind of my core trading hours because that's when the volume is the highest. So typically I'll get a fresh look at the charts Monday morning. I've been pinging the last few weeks when I posted in the crypto channel. And by the way, if you guys want pings on the crypto analysis that I do, there's a crypto react for rolls emoji. You can get those if you're not getting those. But yeah, so I'll kind of get a fresh look Monday morning, kind of what things are looking like, and then I'll typically flip through. I usually have like about Bitcoin and ETH are probably like the main two that I'll watch, and then I kind of cycle through some other large caps as well. I don't really trade any like super low volume altcoins just because they're more subject to manipulation and like liquidity wicks. The large caps are more consistent. But yeah, so I'll take a look kind of to start the week, and then as I kind of revisit previous channels, trend lines, things that I've drawn in weeks or days prior, I'll just kind of start to see setups like developing. And it's kind of something that comes with practice, but you just really have to start kind of charting and drawing trend lines and looking to see for some of these setups. And eventually, like I said, you'll start seeing them more and more easily. But early on, it can be difficult to find them. I typically share some ideas in the crypto chat as I see them as well. So I think that can be helpful to just kind of poke through that every now and then and kind of see, okay, like maybe can I try to replicate this drawing to like see the same thing or something like that. I know Max3 has been doing that quite a bit, and he's starting to see some good setups as well. But yeah, so there's really not any particular time that it's like I'm seeing this setup, I'm looking for it. If I do see like a key level that's interesting to me, often with 0x, I'll set like a price alert if price gets like near that level. You can just like right click the screen anywhere and set like a price alert at the level. I think TradingView also has alerts. So that's something I'll do that's something I'll do if I like notice a key level, but I don't want to like watch it constantly until it gets there. But yeah, for the most part, like I look for a setup. I try to get the best entry I can. And then once I'm in it, I'll typically just kind of set price alerts, and usually I don't wait until it like hits my stop loss or take profit like only. I'll usually like set some price alerts to see did it initially move in my favor or against my favor, and kind of it's a little more advanced, but I'll typically try and kind of like reassess as it moves along. So like this trade I took today, for example, it had a really great move in my favor from like 23,750 or 22,750 up to like 23K. I was like pretty well on the money. And I decided to put my stop loss at break even because that's one of my principles. I don't like losing money on a kind of winning trade. At least like I'll, protect myself with break even, and ultimately got stopped at break even. But at least by doing that, I didn't like lose money on the trade, if that makes sense.
Yep, for sure.
So long-winded answer of saying it depends, but I typically, like I said, kind of look at the charts fresh Monday morning, and then I'll try to trade like at least 3-4 mornings a week, and again, kind of poke through the charts periodically throughout the week.
Definitely. Thanks, bud.
Yep. See, Remy's typing a question. So Sonic just asked, do I only trade crypto or also market index futures, commodities, etc.? Typically just crypto, but actually within the last 60 days, I've been dabbling in indices as well. I actually found out how to get some prop firm accounts. Then I can trade like CFDs and stuff as well. So I've been playing with the US 30 a bit as well. And I've got a former hedge fund mentor that's been helping me with some scalping methods. And once I get that down, I'm probably going to make a YouTube series on how to do that too.
officer's chat. He asked, whenever it's pertinent, would you mind discussing how to set up a TP1 and TP2 in your order? I'm not sure if it was instructions.
So Jinzo, it was a little hard to hear you. You were asking for clarification on how I set like the TP1, TP2, like different take profit levels.
If you look at dive officer's chat, rule is that.
Sorry, it's a little hard to hear you. Could you maybe type it in the chat? Unless somebody else heard what Jinzo was saying. I'll answer Remy's question. Sorry, go ahead, Jinzo.
Check the chat. I just tagged you on what the question was.
Oh, okay. Put it in the VC chat or crypto chat.
It's an offers hours chat.
Oh, okay. Sorry, I was looking at guest questions.
I don't know if you can hear me now, but I was just directing you to there because he didn't put it in the questions. He put it in the office hours chat.
Oh, gotcha. Yep. Cool. So TP1, TP2. So obviously, like, kind of the psychology of having multiple take profit levels is like as the trade gets more and more in the money, it makes sense to kind of take money off the table. And so typically, I'll kind of de-risk, I guess, as take a little bit off as it gets more in the money. So some of these patterns have like kind of standard take profit levels. Like this channel, for instance, like the kind of by the book take profit levels are the midpoint of the channel when it comes up to that, as well as the top of the channel, or in this case, there was kind of a range high as well. So those were really kind of the main levels I was looking for. Because if you only close it when it like just starts moving in your favor, you're probably not going to capture that good risk to reward. You're going to be, maybe doing more like 1-to-1 trades, which you're going to need to have a really high success rate. So waiting until those better kind of take profit levels is usually better. But in this case, there was a trend line that flipped from resistance. Like it's a little, like I said, I don't want to get too advanced, but the price moved enough in my favor that I was like, I don't want to lose money on this trade anymore. And so I put my stop at even, so that worst case, I would just break even. And I think this kind of relates to a question Remy had. He was saying, does moving your stop loss to break even affect your play in a bad way sometimes? So I was actually talking to Max in the crypto chat about this. Usually, crypto kind of whipsaws a lot, and market makers like will do everything they can to stop out people with too tight of stops before the move actually happens. So I usually only move my stop to even in two cases. One, if it hits my take profit one. And so I'm both like taking a little bit of money off the table and moving my stop to even. Or two, which was the case today, where I have like a pretty killer entry. And basically I'm saying the setup has basically been invalidated if it comes all the way back to my entry. Like my entry was so good that even if it comes back a little bit, like if this setup is valid, like I shouldn't get stopped out. And so those are really the only times that I'll put my stop to even, is if I have like a killer entry and I want to protect it out of that first move, or if it hits my first take profit level, I'm locking in, I'm protecting the rest. And so like kind of guaranteeing that I'll make money at least. But yeah, there's definitely a lot of cases where early on, especially if you have an inoptimal entry, if you put your stop at break even, you'll get hit out and then it'll make the move. That's super common, happened to me a lot when I was learning. So just kind of gotta play around with what works best for you. Another strategy, instead of doing the stop loss to break even, that some of my mentors have done is they will like just take some profits, maybe close a fourth or a third of their position on that initial move in their favor. And if it comes back to their entry, they'll just add that size back in. So it basically just like reduces their risk because they've already gained a little bit of profit. So both of them are super valid kind of strategies. I think I typically lean towards the moving my break even up, in those two cases. But today, taking some profits and adding probably would have been a better strategy potentially. Jinzo asked, do I follow any crypto influencers? Yeah, there's a list in the crypto chat. There's pinned messages. I definitely recommend going through those for a lot of good resources, people to follow, YouTubers, etc. But I typically only like Rec Poof is a good guy. He's a good trader. I follow his kind of Telegram and stuff like that. But I still like won't take a trade unless it meets one of my setups. So like say that, they called a long on something, unless I can like do the charting myself and agree like, yes, this is a setup that I agree with. I want to take this trade. I don't just like blindly follow, gurus, and I suggest you guys don't as well because it's really good to verify what you're actually trading. And then dive bars, so it's not a built-in feature of an order place. You just monitor your trade and then move up the stop loss take profit manually. So typically when I set up my trade, I will like put the stop loss and take profit like in place initially. I just might like say that I have four positions for a trade. I might like close one of them when it hits my first take profit, if that makes sense. Or like a fourth of my position, if it's just one position. And then when I move my stop loss to break even, I do like physically adjust the stop loss for that too. And Kaido asked about mentors. So I guess I kind of have three types of mentors at this point. One, I would say like education mentors. So at the very end of my PowerPoint and trading education videos, I have kind of a few guys I learned a lot of this stuff from. So that's kind of the first type of mentor I would say is just like, actual good quality education is super valuable. And I've really tried to share a lot of this in my materials, but I recommend, if you want to look at the same stuff as well, there's going to be overlap with my training materials as well, but educational is a big piece. Second is, kind of like having other pros to trade with, share ideas, and grind with. And so I'm in several different groups. And again, it's all in the pinned messages in the crypto chat. Beasts, taking shots, altcoin traders, and then obviously MBHQ. I'm hoping that eventually we'll have enough traders that we can kind of bounce ideas around as well. But I just kind of look at charts with other pros and see what other people are seeing if we're, seeing opposite things, similar things, verifying each other's charts or whatnot. So I would say kind of an active trading mentor is kind of, and it's almost a trading partner at this point because we're, helping each other out. And then third mentor, I would say, like I said, I have this former U.S. hedge fund scalper that I'm actually learning from somewhat live at this point, and he does give us like actual like challenges for the week and is teaching us live trainings as well. So a few different kind of mentors, but it kind of depends on the situation, but I think all three are valuable for sure. So all good questions. Is there anything I missed?
I think that's it for now.
Cool.
From
so let's. Oh, Jinza's typing something away. Oh.
No, you're good. Go on. Go on. I can ask this later.
Okay, cool. Let's skim through some of the setups and whatnot. So, because I think that's probably the potentially the most valuable material. The risk management is also very, very valuable, but like actually being able to see the setups and whatnot is probably like education-wise the meat of the material. So basically what I do in this PowerPoint is kind of go through major support and resistance levels, and I talk through both horizontal support and resistance as well as this concept called order blocks. And basically what an order block is the last down candle. So those of you even more basic that aren't familiar with like the price chart candles, so each candle kind of ties to a certain time frame. The body of the candle is like basically where it started at let's say it's hourly candles. The body goes from where it started at the beginning of the hour to the end of the hour. And then the wicks on either side are like deviations during that hour, but like outside of the actual like open and close, if that makes sense. And so order blocks are effectively, for a bullish order block, it's the last down candle before like an up move. So basically it's a level where like the price is moving down and then support came in and bought price up. And similarly for bearish order blocks, it's the last up candle before down move. And again, my YouTube videos go in this more detail and actually have some charts, and I zoom in and draw them and show you exactly like what it looks like. So the YouTube video will have more detail, but it's basically just kind of additional confirmations for horizontal support and resistance levels. Trend lines are also a key kind of support and resistance. You basically need at least two kind of pivot points to draw a trend line, and then usually subsequent tests of that trend line will also act as either support or resistance. And so I've got some examples. You can kind of see it with what Iki's sharing. For this ETH chart, like I drew a trend line from the first two pivots, and then the third pivot, it came up to it and again rejected down. So it was kind of acting as resistance, but a trend line versus like the traditional horizontal support and resistance. I've honestly found these trend lines to be better, because the horizontal levels have a lot of eyes on them. Like it's, I guess, the most common levels, and because of that, market makers will take advantage of people and kind of, get price to move just far enough out of a horizontal level to get people out. But these trend lines, a lot more retail people like pay attention to, so they're almost more respected than the horizontal. So that's, I actually have been having more success with trading like channels and off trend lines and things like that versus just the horizontal levels. And then the third kind of support and resistance stuff you can go off is what are called Fibonacci levels, and it's basically this kind of math equation of different ratios of kind of price levels based on kind of the starting point to the ending point. And again, in my YouTube video, I talk about how to draw them, kind of what to look for, but in addition to kind of the support and resistance levels, these can be helpful, especially if you have limited price data in the past. So all three of these are kind of valid support and resistance things to look for. And like the whole point is you basically want to look for places where you're going to sell when other people are likely to sell, and buy where other people are likely to buy. And these kind of key support and resistance levels often define those. And again, don't want to get too much detail. My YouTube videos covers these in more detail. So you can go to the next slide, EQ. So yeah, then I talk about kind of basic market structures. There's trending market structures and ranging market structures. So ranging market structures are basically just price ping-ponging back and forth kind of sideways between a support level and a horizontal support level and a horizontal resistance level. Kind of the typical strategy is to buy the bottom and sell it, and you sell it when it gets to the top. When it's trending, it's kind of an ascending or descending channel, and you're getting either in a bullish trending market, you're getting higher highs and higher lows, and in a bearish market, you're seeing lower lows and lower highs. And typically, the strategy is to look for in a bullish market, look for kind of resistances that have broken up, and now the resistance level is acting as support. So those couple arrows I have in the middle there, it's a previous level that was acting as resistance that now is acting as support. So you could long into those levels, and then obviously vice versa. And so I have some examples for these market structures in the next slide. I think ranging is the first. And please stop me. I'm looking at the screen, so if there's a question, someone stop me since I can't see it. Actually covered trending market setups first. So yeah, like I said, support's flipping to resistance and just kind of selling along the way. So I have some examples on the left there, and then the channel, which is similar to the trade I took this morning. There's kind of two setups I look for with the channels. One of them being like the third touch of the channel, kind of in the direction it's moving. So in the kind of drawing I have there, the third time it came up and touched that top trend line, you could like take a short at that point. And the typical targets are the kind of midpoint of the channel and the other side of the channel. And then the other setup you can look for with these channels is kind of a breakout and retest. So if it's a descending channel, it's also called a bullish flag. And they typically, like more often than not, price will break up out of them. And so what you can do is wait for price to break up out of the channel. And then once it comes back and retest the channel, that's like a valid long. And there's usually the distance of the channel that it traveled, like kind of on the way up, you add that to where it broke out. And that's kind of the price target. Again, this might be a lot, but I cover it in more detail a little slower in the video. But does anyone have any quick questions before we go on to the next thing? No. Cool. So you can go to the next slide. Yeah, I gave you guys homework in the YouTube videos as well. So skip the next slide because it's the answers, but then go to the 2 slides for now. So yeah, I think it's helpful to actually like practice this stuff. So again, when you're going through it, like actually pull up the chart and try to do it yourself. So ranging market setups, there's kind of 2 things I'll look for. The first of which is a range reclaim. Actually crushed a trade last week on a Bitcoin short that did this. So it's basically when price establishes a range low and a range high. And in this case, price deviated a little bit below. So you see where the price kind of went below that lower blue trend line, but then came back above it and then retested the trend line where that blue arrow is. So that's basically where you would long in this case. And the typical target on these range reclaims is the primary target is the other side of the range. The midpoint is maybe like a TP1, but truly like it should be the other side of the range usually. So these are awesome risk to reward setups. And in my YouTube video, I go in a little more detail on how to fine tune the stop loss on these. But I last week had a Bitcoin short on, I think, the 1 hour time frame that I did a range reclaim setup. So these come up a lot and they're really, really great setups to look for. The other one is range breakouts. So say that price has been ping-ponging up and down in this same kind of sideways channel, and then finally it breaks up out of the channel. What you can do in that case is look for price to then retest the top of the range, and that's when you would long, assuming that, okay, it's broken up now, that previous range high is going to be support going forward. And again, my YouTube video, I kind of share a few different charts and better examples. But these are both really awesome kind of setups that have great risk to reward, and even on like 1 hour time frames, so you can see them fairly frequently. But obviously, the bigger time frame, the bigger the move could eventually be down the road. So, any questions on these? Do I use indicators such as open interest, I'm assuming OI, and RSI? I used to use a lot of indicators, I would say. As I have gained more perspective from other pros, the amount of indicators I've used have gone down dramatically. And I really just rely on my own personal charting at this point, and maybe volume to like some extent. But yeah, and then like I guess for confirmations, like one thing I'll look for directional bias, and I usually share this in my kind of weekly updates, is the Aurochs. Aurochs has a proprietary indicator that's something around 70% accurate on like daily and weekly timeframes. So it's like decent for like where we're likely to head next. And then we've also found this GMX is a DEX, a decentralized exchange. And someone built a doing analytics of like the top 100 traders by P&L and if they're longing or shorting. And so I'll kind of look at that as well to see kind of what's like some potential directional bias for like where things are heading. I definitely don't use it as like a strict rule. It's just like another confirmation I'll look for. But yeah, I do look for momentum indicators in terms of divergence. That's something I look for. It's something I cover a little later in the PowerPoint. So I do typically look at some type of momentum indicator. I personally use what's called a demand index for Aurochs. It's just another version of the RSI, really. But I do look at that periodically for reversals. Any other questions? There's no chance I'm going to get through this whole PowerPoint in 5 minutes, so you might as well just ask questions.
Yeah, and I think we can go a little bit over. Obviously, we had a little bit of a late start, but this is obviously being recorded. So where people find interest or questions in, they can obviously breeze through the recording. So feel free to go in depth. I generally love to go over topics in depth because people can then pick and choose which specific topics they want to go through time and time again.
Oh, yeah, I can probably go at least like 30 over, but we'll see what other people have. And then Remy, that GMX doing analytics is again pinned in the crypto channel. So just look through those. Do I close out positions daily or hold any for mid or long term? I typically am comfortable holding something if I'm in profit and my stop loss is in profit, but I really don't recommend like having an active trade where you're in drawdown like overnight. You just won't sleep well, and I'd almost rather just be flat overnight. Unless, like I said, if I had a killer trade, I've taken profit a little bit, and maybe I have a couple runners, but my stop is at even and I'm in the money. Maybe I'll leave that overnight. And then Jinzo just asks, give us an example of what you're looking at when you see dumps like today. Well, today I was longing, so I was like, oh man, I got stopped to break even. But so it was in an ascending channel, and it has broken down from the ascending channel. So just like I went over in my materials, it broke down pretty hard. Yeah, went down to like 22,460. I don't know if I would even short it. So if it had like just broken down a little bit, I mean, it did actually come up and retest. So again, let me just take a screenshot real quick because I can't screen share. All right. I think this is good enough. All right. I'm going to zoom in a little bit so you can see. This wasn't like a great setup, but yeah, just to share kind of what I might look for in this case. I'm just going to draw this real quick and I'll share screenshot. Sorry, just give me 10 seconds. All right. So what I'm about to post is that ascending channel I was watching for Bitcoin. It broke down from the channel. And
can you say that one more time? You started getting rogued.
Sorry, what was the last thing you heard?
What you're about to drop in the chat.
Gotcha. Yep. Well, I just put it here now. So basically, I was looking at this ascending channel and I took a long, assuming that it would kind of move back up to the top of the channel. It didn't. It actually broke down. And so I put a little blue arrow. It might be a little hard to see, but if it kind of came up and retested that channel, that could have been a valid short. It wasn't like super clean. So I don't know if I would have taken it. I would have probably waited till at least that big first red candle like truly confirmed the breakdown. Like if it just wicks down below, that's not like confirmation, that's just like a pierce. But when I had that big red candle that like closed around like 22,700 or something, then it was pretty clear that it had broken down. And then if it came back up and retested, that could have been a valid short. But yeah, that's like something I would have looked for. But right now, like I'm flat, and if price goes up or down before tomorrow morning, like I don't really care. I'll take a look tomorrow and see what it looks like and see if I can find another setup. But yeah, it's always just like if something doesn't work out, cool, it's on to the next one. If it's a good trade, cool, on to the next one. Like it's just you got to kind of have that. What's it called? I don't remember what the term is, but yeah, just basically not like getting caught up in wins and losses and just always looking for the next trade because there's always going to be another trade.
Eyes forward.
Yep. So cool. So I think that's everyone's questions so far that I saw. So we can go back to the PowerPoint. And so there's going to be like an example. You can skip the next couple slides and get to the next piece. Skip the next one as well, the answers. And then I have kind of a slide combining HTF stands for high time frame price levels with LTF low time frame factors. So this is typically like a lot of people ask me like what time frames I use, and the answer is multiple. When I'm looking at a chart like totally from scratch, I'll start on the weekly time frame, and I'll typically draw like major support and resistance levels, major trend lines, any like key order blocks I'm seeing. And then I'll go to daily and kind of do the same and refine a little bit. And then I'll go to 4 hour and kind of do the same and refine a little bit. And the value of doing that is maybe when you get zoomed in on a 1 hour chart, you obviously don't have like the big picture context. But if you've already drawn those lines, you'll see like, oh, there's this line I'm seeing. Like, what is that for? And since you've drawn it before, you'll be able to like have that as a reference point instead of like, if you focus like too much on the low time frames only, you'll have lower success in general. It's really important to have like a big time frame context. So yeah, I typically do weekly, daily, 4 hour, 1 hour, and 15. Those are kind of my main ones. And again, I really only touch the weekly and daily probably like once a week or something. I probably operate mostly in like the 4 hour, 1 hour, and 15. For kind of day trades after I've drawn the initial stuff, because like the big picture levels aren't going to change like in a week. Usually like those levels are still relevant. It's the lower time frames that change more, obviously, on a daily, week to week basis. So I put an example here, and this is a trade that I called out last fall. It's October maybe or November. It was this descending 4 hour trend line that I saw price had rejected 4 times and then finally broke up out of. And then, so that was on the 4 hour time frame. And then on the 15-minute time frame, I noticed this pattern called a falling wedge, which most often breaks to the upside. And kind of the textbook entry for trading a falling wedge is waiting for it to break up out of the wedge and then kind of on the retest, enter long. And so it's hard to see, but I literally drew like a squiggly for this trade and put this one like played out perfectly. It was pretty nice, but it's the power of combining like high time frame price action with like lower time frames to kind of fine tune your entry. Because you can kind of have the right idea on the high time frame, but the lower time frame really helps like try and nail like a good entry off kind of a key level instead of just like, you could use like lower leverage and broader stops and capture the same moves, but I typically try to kind of size in appropriately based on my stop loss and take profit and stuff. So I try to get the best entry I can for any given trade. But yeah, that's it for that one. And again, I have a couple examples. You can skip the next couple slides. Again, someone holler at me if there's questions. And then yeah, bonus material. I talk about kind of 2 things. I also look at TD sequential and divergence. So TD sequentials is kind of cool metric that I think it's basically like, it counts like the number of candles in a subsequent trend. And I think the math of how it works is like if the candle 4 candles prior, or sorry, if the current candle is closes higher than the candle 4 candles ago, then it adds to the count. So basically, if price is like generally moving up, it will like add on to the counts, and you can kind of see the little numbers above the candles on that top chart. It might be a little hard to see, but basically, the power of TD sequential is I don't know why, but when TD sequential hits a 9 count, it's often seen as like a reversal point, like it's just like some kind of time count technical analysis tool. And especially if there's a 9 count into like a resistance level, then you have kind of 2 factors going for you. and that can often kind of lead to a reversal. So that's something I'll look for. Again, just kind of another factor. All of these setups, you're just looking for factors to support your trades, whether it's the chart pattern, the TD sequential, the overbought, oversold, different things. There's all kind of different factors you can look at, and these are just two more that I'll look for. Divergence is another one, and I typically just use kind of the traditional definition. And if you look at the regular divergence at the top right, you have that cheat sheet. It's basically where your price makes a higher high, but your momentum indicator, the red one, is making a lower high. So what this means is like price is continuing to trend higher, but you're seeing fading momentum. And this is often an indicator that there could be a trend shift. So again, something I just kind of look for as another factor. If there's not divergence and I'm looking for a transition trade, I might just kind of hold off and wait until I'm seeing divergence. And again, it kind of varies on different time frames, so it's not a perfect. It's not perfect, but it's just like another factor to look for. Any questions on these two things? Nope. All right. Next slide, I think, is my setups or thinking like a market maker. Sorry. So this YouTube video is probably better than I can explain this in a couple minutes, but effectively what I've learned, it's like 20 minutes. We're not going to watch the whole thing, but effectively what I've learned from trading crypto is that, so there's retail traders and then there's market makers. So retail traders like us, maybe we're trading with a few $100, a few grand, even, some of us with a little bigger accounts, maybe 10 to 100K, like pretty like small amounts compared to market makers who have millions of dollars that they're trying to trade. And so what market makers need to do, like their job is to like grab as much liquidity as possible, so they can fill their like big positions. And so one of the things that will often happen with crypto is you'll see like, and I think Remy, you mentioned this too, like retail traders will often get like stopped out before the move actually happens. And the reason is market makers are trying to capture that liquidity before the move happens. So I have a couple examples on this page of kind of what I call obvious stop loss levels. And it's usually like a, pretty obvious support resistance level, like in really recent times. I mean, these are like 5-minute charts, like very kind of recent levels that have been tested. And retail traders are often like, okay, I'm going to long and just use like the low of the day, or like if it goes below that low, then I'm out. Like they'll just put like super obvious stop loss levels. So it's knowing that market makers usually grab that liquidity. It's almost best to like think, and like the biggest thing from this video is like, think where other people are going to put their stop losses and put your entry there. And so you're basically like waiting for those liquidity wicks to happen, and you'll get more optimal entries and have less odds of getting stopped out yourself, if that makes sense. So the video is super helpful, but this is just like a kind of good concept to think about when you're day trading, so that you don't get frustrated getting stopped out all the time before the move happens. Any questions on that? Oh, EQ posted the video. So, and again, this is also pinned in the crypto chat, as are most of the things in this. So you can go to the next slide. And I already talked about the resources that I use for directional bias. So you can either grab them from the PowerPoint, or they're also in the crypto chat as well. So you can skip over this. We already kind of talked about this. I don't know if we really need to go over this too much. I've kind of talked a lot about this. Basically just like things to think through when you're actually looking for a trade. I guess the one thing I haven't mentioned is I use a site called 0xFactory.com. It's like kind of halfway down the slide. Just to check, like, and Shaggy posts like macro updates as well. But it's very important to at least be aware of big macro things that can cause like huge volume and volatility spikes, just so that you're not like taking a trade and just randomly like, holy crap, like why did it just like go nuts? There's probably like some CPI data or something that came out and caused a lot of volatility. So that's something I use just to kind of glance at every week. There's some earnings happening this week, and I don't think they're. I mean, Microsoft's earnings came out today. They were bad, so like that could be why, or at least a contributor to why it sold off today instead of going higher. So that's something to think about too. But most often than not, like it's usually like FOMC, like the Federal Reserve meeting, or CPI, anything that affects the dollar has been really impactful now. So.
Can you repeat that last statement right before the Federal Reserve?
FOMC?
Yeah, we couldn't hear anything. You just started losing connection.
Okay. I was just saying that lately the FOMC, like Federal Reserve meetings and CPI data releases are kind of the most impactful things lately because they're like impacting the dollar. So I think you can probably go to the next slide now. And this is my like typical setup on Aurochs. So I'm gonna come out with like a guide for Aurochs in a little bit. They're actually doing a facelift on the terminal to make it a little more user friendly. So I don't want to make a guide and then have to redo it in like a month. But it's an awesome platform that you can kind of set up custom templates. It's similar to TradingView. It's free for crypto. And I use the grid mode for a lot of my stuff. So I can have kind of multiple charts pulled up, whether it's bounce trades with the Aurochs indicators or just kind of clean charts with just my drawings that I'll go on different time frames. So this is typically what I have up on my laptop. And then I showed you guys kind of the 4 traditional finance charts and Bitcoin dominance that I have on my monitor. Let's see any other questions. I think the next thing is the kind of key principles for day trading. So we can look at that. So again, I don't need to read this whole thing to you guys, but these are just things that I've learned from trading, both like emotionally, psychologically, how to increase your success rate. I think some of the biggest ones are just not trading if you're not fully dialed in. Like I think a lot of us get FOMO both with NFTs and trading, and I think a big problem I see a lot of people is like trying to catch every move, or like if the price is going crazy, they're like, oh, I gotta catch a trade or catch a piece of it. But if you're not like fully dialed into the charts, or if you didn't sleep well, or if you're like annoyed for some reason, like it's usually not a good idea to trade. I'm pretty open with people, so I'll share this as well. I actually had a bit of a depressive episode last summer, late summer, and I didn't trade for like 2 months because I was like, I'm gonna lose money. Like I am not mentally or emotionally sharp right now. And so I was just trying to avoid making any like significant decisions until I got on some antidepressants and like am fine now. But yeah, I just like it just like wasn't a good idea to trade if you're not like mentally sharp, well slept, like dialed in. And so I think that's a super important, and it probably applies to NFTs as well. Like I think quality trading time beats semi-focused trading time anyways, plus it'll give you better balance. So that's been one of the nice things, like since I've kind of decided to only trade weekdays and kind of market open to noon as kind of my core hours, it's given me a lot better kind of balance, and taking weekends off to mentally reset's been super helpful as well. So yeah, if you have any questions on any of these bullets or anything else, that's pretty much all the materials. Like I said, I'm in the crypto chat pretty like throughout the week. So as you go through stuff or start charting yourself, or you're curious about platforms, I talk about Bitkit has a really good demo account that is the same UI as everything else. So I recommend that for kind of paper trading early on. And I kind of go over that in my first trading video. But other than that, yeah, if you have any last questions, we can kind of do some rapid fire questions or anything else. So let me know if anybody has anything they want to ask. So best website to practice paper trading, I use Bitkit, and I talk about it. I'll give you a link if you want. I'm actually a partner with them, so might as well get you guys hooked up with that. But they they have like a 3K demo account that you can like totally blow and not lose any money, but it uses the same UI. So it's a great way to learn. Let me just grab that link real quick. Sorry, 1 sec. I'll post it in a little bit. Does anyone else have any other questions in the meantime?
Yeah, I got a question for you. How long have you been trading? What was the catalyst to get you into trading?
So I first bought Bitcoin back in October 2017. And I took like $6,000 up to like 36 grand and then lost it all. Like most people usually do. And yeah, it was mostly from like blowing margin accounts. Obviously crypto retraced like 90% as well. So that was a big contributor, but yeah, I don't know. Like I'm pretty stubborn. Like I was an actuary. I just posted the link for you, this year. I'm pretty stubborn, and like I saw people like being successful at trading, and I was like, if they can do it, I can do it. The kind of funny thing with trading is you don't actually have to be smart to do it. You just have to have a system that you can follow, have emotional like discipline to stick to your system, and yeah, just like build consistency. But you don't actually have to be like the smartest person. You just have to kind of, like I said, have a good system and follow it. But yeah, I would say to kind of follow up. So I have been trading since 2017, but really since May of last year is kind of when I went like all in and just like spent, hours and hours and hours doing trainings and educations, watching YouTube videos, actually practicing live, of course, trading most days of the week since like September last fall. It takes practice, but it's a skill like anything else that can be learned.
Got it. And as you're trading, do you spend most of that time fulfilling trades and setting up what kind of trades you are setting up for like the specific time that you're actively trading? Or is that also time that you spend researching the market and, catching up on whether there's an earning or a story that came out, all that kind of stuff?
So yeah, I posted kind of my, I guess, routine as well in the crypto chat. I don't know if it's pinned, but I can kind of share it with you guys as well. I typically like wake up an hour and a half before market open and kind of catch up on both like maybe Benko and YouTube videos, or maybe like daily recaps from some of the guys I follow. Just kind of keep a pulse on kind of market sentiment from some people. And then obviously like doing my charting myself before market open is super helpful. But I really only take like on average, I would say 2 to 8 trades a week. So that's kind of how selective I am. And again, if I'm not like feeling sharp, maybe I only trade like 1 day a week. But yeah, I definitely don't trade like super high frequency. Like I only took 1 trade today. So yeah, hopefully that gives a little insight.
So in reference to the trade, obviously each trade is different. But are you doing bigger trades, or are these just, it really just depends, right?
So I have it to where like I'll put in my risk that I'm willing to lose, and basically whatever the levels say that I can risk, that's what I risk. So if I feel like I've got a setup where my stop loss is like pretty tight, like based on the setup, then I can size up more because there's like less distance to my stop. But sometimes I'll take like a kind of a broader stop swing trade and I'll size down in that case. So it's really just whatever my position size tool spits out. Like it's pretty variable.
Got it. Yeah, I was definitely asking because, as people get into crypto trading, bankroll might be different for each one of us. So, it doesn't mean that you can't be taking those smaller trades if the bankroll permits it. But yeah, I wanted to get some insight on that. Thank you.
Yep. Yeah, and everyone's risk tolerance is different. Like I typically use 3%. But if you're a YOLO person, like I wouldn't go over like 5% just in principle. Like I would say if I have a super high conviction trade, like 10% is like the most I will ever go. But if you have like a big loss, it's just going to take longer to recoup it. So the whole point of kind of keeping consistent risk management is that you'll be able to make it back like easy if you have a couple losses.
Sounds good. All right. I guess that's all of my questions for today. I don't see any more questions in chat, just a lot of thank yous. Big shout out to you for taking the time, walking us through all your strategy, best tips on how to get started. Thank you, everyone, for tuning in today. I know this was a very talked event. So for those of you that couldn't reach out and are looking forward to the recording, hopefully you enjoyed. If you have any questions, be sure to reach out in the crypto chat and we'll keep things going there. But that's it for today, and we'll see you guys in VC1. Thank you.
Sounds good. See you, everyone.